We are going to be talking a lot on the podcast today about 2 years since COVID and obviously this new variant that's turned up as well.
But the balanced portfolio year to date is up 8%.
Yeah.
And you tend to forget about that longer term trend.
So you've been in London earlier this week, weren't you?
I went on Sunday and was back on Tuesday.
Yeah. Anything happen while you were there?
Yes.
Do you want to tell us? And welcome back to another True Potential Do More With Your Money podcast. It's episode 97 today, but it is the first of the festive month, and that's why we're joined by three wise men. They're not three kings, but they are three chiefs. We've got Mark Henderson in the house today. Hello, Mark.
Hello, Peter.
Chief Executive of True Potential Investments. Jeff Casson's back. It's been a few weeks, I think, hasn't it, Jeff?
Yes, indeed. Good to be back.
It is indeed, and as regular viewers and listeners will know, Jeff's our Chief Investment Officer, and well, he's back again. We like him on the podcast, and he's our Group Chief Executive, Daniel Harrison.
Good
Hello,
morning,
Daniel.
Peter. Hello.
Right?
Very well, thank you.
What are we talking about today?
I think we're talking about the weather, the snow,
We
storms.
can do the weather, yeah.
That's topical at the
That's
moment.
right. You've got no notes, so
I don't have a note. I don't need the notes,
anywhere.
Peter. All of the knowledge which will be distilled today sits in here.
Oh, good.
Yeah.
That's good to
So
know.
that's the end of this
That's
podcast.
Yes.
So,
Thanks for tuning in,
thanks.
and we'll see you next week. Jeff, what's been the highlight of your week up until this point?
I suppose the storm that we've had.
And that was your highlight?
Yeah.
Right. Yeah. Why?
Got me wood for the next year, so that's quite good. Can get out with a bit of exercise, cut down some trees.
You've been chopping up this week, have
I
you?
have indeed.
Good. Oh, well, hey, that's good to know. I'm pleased for you.
Thank you.
If we get cold, we know where to come.
You know where to
warmer.
come, yeah.
That's right.
For small price.
Oh, I see. There you go. Because he manages money every day. So
That's
you
what
get
you
out for
want.
out.
You want your chief investment officer looking at the margins, Peter.
That is very, very true indeed. Mark, I'm glad you've come very smart, you three, because I noticed on the podcast last week, if you watched it on YouTube, the four lads who were on, all looked identical, white shirt and a gilet, which there's nothing wrong with. But when you've got all four, it did look like a bit of a 90s boy band to me.
I don't know anything about 90s boy band.
No?
It looked like something. Yeah.
Boyzone.
No comment.
Yes. Well, anyway, look, we've got lots to talk about this week. But first, I wanted to we are going to be talking a lot on the podcast today about 2 years since COVID and obviously this new variant that's turned up as well. But just out of interest, just before we get into how the markets responded, just wanted to get your sort of thoughts in the last week. That, we've got new restrictions have come in, they're accelerating the vaccine rollout. I mean, what's your kind of takeaway? Just a week on from it all.
I think you're probably more from Mark and Jeff with actual data and how markets have responded. But I think if you could kind of put it in one word or two words, it's knee-jerk. Feels like the week of the knee-jerks here, where this time last week, it was discovered, mass panic, whatever came off the FTSE, and for no reason whatsoever, by the way. Travel got blocked instantly, people started flapping about masks. And then all of this week, really, there's been different comments said by different people, and all of which seem just like, again, knee-jerks. Mark, you and I were talking about the chief executive, say, from Moderna the other day, saying, well, it might take a little time to adapt the vaccine.
Yeah.
You think, shut your trap.
Yeah.
I know that sounds rude, but him saying that cost hundreds of millions of pounds on the market. And you feel like saying, we've been through this over the last 2 years where people have adapted vaccines in record time, where the brightest and the boldest brains of the science community have built vaccines in record time and then adapted vaccines. And I've got no doubt that the clever scientists at Moderna, at Pfizer, at AstraZeneca will adapt a vaccine to also tackle what looks like the mildest form of coronavirus yet as well. So you probably pick it up in my tone a little bit, and I'll shut up in a second, but I'm irritated by it this week.
We're getting that vibe.
Yeah.
The interesting thing about it is that everybody turns into sort of a virologist and wants to provide comment when, as Dan says, it's the scientists that should be providing comment, and none of them are.
And probably not too soon either. Let's find out more about it before we start.
Give them time before we all start to worry about something that might be nothing.
Yeah. Is that your view as well, Mark? You share that sentiment?
Absolutely, Peter. I know there was surprise, or supposed surprise, when the first case was discovered in the US. Well, come on. It's going to get there, isn't it? It was just when. And that had an effect on the market. It was a bad afternoon. But the very next day, things returned and the markets bounced back. So as Dan said, it's been a week of ups and downs, and as we open up this morning, the markets are back, led by what happened in the US overnight.
Yeah.
I think the other thing is that we started off November in a really positive sense with markets, and really the last 3 days of the month were completely ruined by this announcement, but with not really any finding. That's the worry.
Here's a question which will show my naivety, but it'll give you a chance to explain why it happens. To Dan's point around the knee-jerk, because I was like you, I watched the markets on, say, Monday or Tuesday, whichever day it was, and they're down because of, people, if you like, heightening the anxiety unnecessarily. But then the next day they're back up again, and you just think, why do the markets do that? Why don't they just, because why have the drama of going down just to see a return, and in some cases bouncing back higher 24 hours later? Why can't they just smooth that out and just not panic?
I'd love them to do that.
Why don't they?
It'd be much easier. They just why? Because they're a living, breathing thing. Yeah. Just like here, we're all reacting differently to news. Market participants react differently. Somebody can take a really negative view, and they may want to sell at that point in time.
Yeah.
Others will see that as an opportunity and step in and buy back. I think the other thing just to be aware of at the end of last week, it was Thanksgiving in the US. So that downdraft that we saw last Friday was in markets that are pretty thin. And what do we mean by that? Just not a lot of people at their desks working, because it's normally a very quiet period. And that sort of manifested itself, I think, a lot in last Friday's market move. So then if you fall into this week, we haven't seen moves of the same magnitude. Yes, we've had the choppiness of markets, but not to the same magnitude as we saw.
Well, go on and give us the week in a bit more detail then in this country and around the world.
Yeah, I suppose it's been very much as we've been alluding to here. It's like the market has been moved by people making statements.
Yeah.
People who probably don't have that full set of information as yet. So the Moderna interview at the start of the week, markets go back. We then hear from the World Health Organization that things mightn't be as bad. Market goes up. Then we hear case in the US, as Mark says, on Wednesday. Equity markets fall. I think the thing through all of that is that what have we seen? We've seen the benefit of diversification. We've seen the role of sovereign bonds within multi-asset portfolios really delivering and providing that ballast into portfolios through the course of the week. And that's what we want to see. That's what we want to see within the True Potential portfolio solution. So that has been the dynamic that's worked its way through. We touched on morning markets this morning about the oil price. The oil price has come off nearly 20% from its high, from 83 down to 63. We're all talking about high oil prices, but really that's kind of slipped below the radar screen. So that's been something that should be supportive from an inflation backdrop. Oil, yes, it's not as an important a commodity as it was from an energy perspective, but it's still important as to how we all think about inflation. And you see it this is the thing, you see it at the petrol pump all of the time. So it reinforces people's view on inflation. So seeing that coming off, I think, is a
doesn't
positive.
Feel like you see it, does it? I filled the car up the other day and it feels like the prices are as high as ever.
And what is there is a bit of a delay in that transmission, but hopefully you would be able to see that. It's very important for the US. It's a really important indicator for the US to see that oil price coming down. So that's been in the background. We've also seen a little bit of movement in currency markets over the course of the week. Again, that's really building on what we had been seeing over the course of November. So there's if you will, an interruption, this uncertainty, this unknown about what this variant may or may not do.
Yeah.
And I think that's the point. Nobody actually knows. So
yeah.
I think it's worth pointing out, Peter, as well, that there's been volatility in the last few days, but the balanced portfolio year to date is up 8%.
Yeah.
And you tend to forget about that longer term trend when you've got 24-hour news feeds coming through.
Yeah.
More equities in the portfolio gets better growth, and the growth in the aggressive portfolios are up nearly 13% year to date. Now that's fantastic returns in a world which we focus on the short term and what's immediately ahead of us. So our job is to step back from that and be able to look through the headlines and position the portfolios accordingly.
And you're right that we've had, which is the topic of today's podcast, we're coming up to 2 years since, which is unbelievable. I mean, I remember some of the very first conversations around here at the end of 2019, and obviously, I know you guys, all three of you, were overseas before it really caught on, and as a colleague of ours is always at pains to point out, it wasn't you. we know that. But you know, the fact that we're at almost the 2-year anniversary is quite incredible. But I wonder why we haven't got used to it then. You know, we've had variants. I mean, is this the 4th or the 5th kind of variant we've had to deal with? And
but I suppose,
are we ever going to get
to an extent we have got used to it, because we're back working in a very different way than we were just in March 2020. We've evolved, we've adapted, and I think that's the important thing. So if we think about it from a pure demand perspective, demand has recovered much faster than people expected, but it's also back above 2019 levels. So economically,
we've recovered.
We've seen
the
that
hysteria
recovery.
that Dan's talking about, you still get that.
Exactly.
We know.
Exactly.
But perhaps you always will.
I think what's been quite pleasing, obviously, Mark tends to say a lot of this on the operational side of the platform. We haven't really had any clients panicking this week. If you rewind back to, say, March, February last year, where we've seen this extreme volatility in these movements in the market, clients were unsettled then, and that's when we spent a lot of time ringing clients up and saying, look, this isn't a market issue, it's a virus issue. It's what we were seeing last year. It's still the same now, but I think people have got used to it, as Jeff says. I think any of us just need to go and walk around the streets now or look at the roads and things like that. I think there is a lot more back to normal now, and I think market shocks will happen. You know, I think as Jeff says, we'd rather never see this volatility, but I think that's been a bit of a mantra from the last 18, 19 months anyway, which is these 1%, 2% swings in a particular day have been reasonably common over the last couple of years.
It's interesting, the volatility point and how markets bounce back. I was chatting with Mark earlier in the week about somebody I know who'd said, you know, who isn't really invested other than probably their pension, and said that, you know, didn't everyone lose their money around, you know, March last year? And I said, well, if you look at and I actually just on my phone showed it. So let's look at say the S&P or the FTSE, for example. And of course there is the big dip. But then if you remove your thumb from what happened after that and you show the rest of the graph, not only did it bounce back, it's now high, to your point.
It's record highs.
Record highs.
You just do.
And this week in a way has been a bit of a microcosm of that. And is that not what we're just in for?
Well, if you refer to what Mark said, Mark, you know, as the approach Mark and Jeff and the rest of the team, you look at the long term.
Yeah.
Don't do what I did and react in the huff and get irritated and frustrated. But I'm allowed to do that because I'm not managing the money from there. But Jeff and Mark, look, and if you just use the data, which the team do, and you use hard facts and you use evidence, you will always end up winning in the markets. You know, volatility or not, there's tens of years now of you know, going back.
I think the thing there is volatility creates opportunity.
Yeah.
And those are the things that you must remember. I think the other thing to think about is just when somebody says, well, is now a good time or a bad time? It's dependent on their circumstances, but in general, you're better off invested than not invested. And why do I say that? Because at the end of the day, to make that judgment, it's about trying to call the market, and that's a coin flip. So if you're coming out of a market, that's the easy decision. The harder decision is, do you get back in? Oh, it's down again today. I'll not get back in. Oh, it's down. It's up. Oh, I'll wait. And it turns into a very difficult decision. So maintaining your approach, maintaining the consistent, focusing on your longer term goals is crucial to allowing you to achieve that. Because if you come out at the wrong point, it can be very, very difficult to get back in.
And just maybe delve into that a bit more, Jeff, because I think our message to clients and to people watching would be, just don't panic, don't do anything. You did the right thing by investing in the first place and then trusting your money to you and your team to look after it. So why then change that behaviour? Give us an insight into what your team do though, Jeff, to find those opportunities.
Why change your behaviour, or why not change your behaviour? Just actually commit to what you want to achieve. And if you're wanting to invest, as Dan says, for the longer term, it's all longer term goals that we've got. Leave it be. Let it sit. It will go up and it will go down, but over that longer term, that return will be there, and that's the focus. It's about focusing in on how do we achieve the returns that our clients need over the longer term, which is commensurate with the risk that they want to take, and that's a very important thing, because it's about managing that journey for them, and this is something that we have to really be to consider, because at the end of the day, what people see in those headlines is not the volatility that's being delivered in a true potential portfolio solution. Our solutions are not just equity. They have got very diversified exposure to different asset classes that behave very differently. So as we're talking about their volatility in markets, one would say, oh, everything's down. That's not the case. There's opportunities to earn a return in that environment, as we've seen from sovereign bonds. They did exactly as we would have expected them to do in our portfolios on Friday when we had that step down in equity markets. And it's about constructing a portfolio that gives someone the opportunity to achieve.
And that's
goals.
the bit you can't really do in your bedroom if you're trying to just pick stocks. You know, you're going to be at the mercy, as you say, of a coin flip versus the science and the teamwork and all the expertise over decades collectively that goes into what you do.
Exactly.
I'm interested in the idea of, you mentioned there how if markets are down for a day or two, it's an opportunity. And I think that's a really important point that perhaps I think would be of interest to our listeners to know a little bit more about. How do you go about finding those opportunities then? What do you actually do?
Well, so if you think about our portfolios, we're looking at those on a daily basis. The sub-managers that we use are looking at those on a daily basis. The other aspect to think about is just how they are investing. Because of the way cash flow's coming in, they're able to effectively pound cost average. So you're buying those units at a slightly lower price on the days that they fall and then benefiting from that recovery. It's also looking for where opportunities might present themselves. So if a certain asset class falls disproportionately relative to how we think about fair value, that presents an opportunity.
Yeah.
So it might be that equities were down 4 or 5% in a day. Well, actually, let's increase our allocation there ever so slightly to benefit from just a recovery that will come over the medium to longer term. And that's very much about what it's about actively looking for and seeking out those opportunities on a daily basis if we so wish.
Yeah.
I think, Peter, also it's worth pointing out at this stage that the ONS statistics for UK household wealth showed the highest levels since records began in 1995. There's something like 11.2 trillion of assets in household wealth, and it's been boosted by two things primarily. One is house prices, which have seen an increase, and secondly, the rise in the value of pensions. And that leads, or tracks directly back to what Jeff was saying there. So I know that every individual in the UK probably won't be able to say, well, I feel better off. But as a country, and the official statistics are showing that at this point in time, UK households have never been better off.
Yeah. I mean, Mark, you obviously have, in your role as Chief Executive of True Potential Investments, you have high-level conversations with all of our fund manager partners. And what's the mood that you've picked up over the last week? Are they of the same view that we just, we've just got to ride through this and no one should be panicking?
I think, Peter, to say just ride through it, that introduces almost a degree of complacency about it. No, you can't just sit tight. You have to make informed decisions on a day-to-day basis, but there'll always be opportunities. And right from the very beginning when we set up the portfolios on a multi-asset basis, we did that so there would be somewhere to go.
Yeah. Always
somewhere to invest. And this month marks another great month for True Potential, because we've had £571 million of new funds committed to the portfolios. Brilliant figures. It takes us over £6 billion for the year, and that lends itself to investing in opportunity. So the cash flow point that Jeff made before, we have money coming in, and we'll be able to look for opportunities no matter where they arise across the world.
Yeah. So what's your final, not that we're finishing just yet, but what's your message to investors and clients who might be watching this, who are just, what would you say? What would your final message be?
Well, I think the message, Peter, is going to be stay invested, have a long-term goal and stick to the goal. Don't let the short-term news flows interrupt that.
Yeah, but I think it's be reassured as well that there's individuals like you, like Jeff, like the rest of your team, who are working with these fund managers, who are applying the diversification, who are looking for these opportunities, who aren't riding it out, who are actually actively managing the money on your behalf every single day.
Yeah. And that's the important point to your earlier point, Peter, about the opportunities. They're seeing those opportunities and they're exploiting them within the True Potential portfolio solution. And that's what we want them to do. Yeah. And that's what they do. And I think the other thing, just to what they're thinking about, this week we've been going through our monthly set of calls with all of the managers, and it's really about being considered, thinking about what could be the scenarios that this mutation may or may not bring. What action would one take in the portfolio as a result of that? Yeah. And it's that, not a knee-jerk reaction, it's very considered, applying probability, thinking about, well, what scenario is more likely, what changes, what opportunities does that create within the portfolio? And that's been very much the discussion that we've had with each of the managers this week.
Yeah. I think it'll be interesting to see or it is interesting to see how the public have reacted this week, because I think there's been a lot of, look, we just need to get on with life. I think that's been the overwhelming sentiment I've picked up online and from people I've spoken to. And there was a debate in Parliament this week about these new restrictions that were coming in, and there was one MP made a very good point, which is, the vaccines have done their job. We've got now deaths down to levels that are comparable with flu, so the vaccines are doing that, but we don't impose restrictions, we never have done, for flu.
Yeah,
so
correct.
We've got to just get to grips with this as a country and not do what you said at the start, which is the knee jerk, and therefore
there's going to be a variant every so often, as there is with the flu, and we don't apply this naming convention to the flu. And I'm not saying we're as au fait with this virus yet as what we are saying with the flu virus, but it has to become normal. It has to settle down. We have to stop overreacting and panicking. And what you also don't want is your leaders, full stop, be it government, be it World Health Organization, be it heads of pharmaceutical companies, panicking or giving panicky statements, because I think more than anything, there's been an opportunity for leaders to actually lead and give confidence over the last couple of years. And some of the companies who've done really well, some of the governments which have done really well, they've had clear leadership, they've had confidence within there, they've had guidelines from there, which they've then stuck to and they've been consistent with. Governments, organisations, others who've struggled and been criticised for it have been inconsistent. They haven't communicated well. They've panicked. They've give city statements out. And that's not just this week. That's the last 2 years, and it kind of might go.
And I suppose that feeds into your earlier question, Peter, around how markets behave. Because really, what's the market looking at? It's thinking about, well, what is that policy response that's going to come through? We're not sure. It's been different in different markets. You look at Europe. Europe's in a very different place than the UK is, a very different place than where the US is. And it's also about how it feeds into behaviour. If you're getting an uncertain message, well, I'm not sure what I can do here, it influences how you behave economically. You might decide not to go out on Friday night or Saturday night.
Well, there's been a bit of that this week, hasn't there, Jeff? With have a festive party, don't have a festive party.
Exactly.
And that's not great when you're getting those kind of conflicting messages from effectively part of the same team.
Straight to business.
Yeah.
You've lost revenue. Yeah. It feeds all the way through very quickly, and that's what the market's grappling with. It's as much as we know that this was going to be their ongoing evolution of a virus as a natural status. Yeah. It's the uncertainty of the policy response, the uncertainty how we as individuals and businesses react to it. And is it knee-jerk or is it considered? That has implications.
Well, it was only 2 weeks ago the media were kind of patting ourselves on the back, saying because we had higher rates during the summer in the UK, because we released our lockdown earlier than, say, our European counterparts, we should have a milder winter, versus, say, what's been happening, say, in Central Europe, in your Austrias and your Germanys and your Holland and things at the moment, where they were a lot later coming out of lockdown, which now means they're getting the inevitable spike, which then means they've brought further lockdowns and all the carnage going on. So that was only 2 weeks ago. I was reading in the Saturday Times. So, all of the data's right, and then you get, this new variant popping out in southern Africa, and,
And we forget as well, actually, it's easy to kind of, if you like, trash Britain, and there's a lot of that goes on in the media, but like last night, as I was saying before we started the podcast today, I got my booster last night. I was able to just go around the corner, and within 20 minutes of having a text saying there's they're doing a drop in and out, bang, booster done. And that's the great side of the way we've been able to manage through this problem. We, as you said at the very start, Dan, we've come up with this vaccine. We've managed to do the rollout. We're ahead of. I can't think of anyone else in the world that's able to do that at this scale and consistently and deliver 3 shots and do it pretty straightforwardly. And I've not really heard of anyone who's had a bad experience of being able to get their vaccine. And the fact that we can do that is
great. There's been some great wins. There's been some great own goals as well from our government, by the way. But there's been some great victories. Yeah. Victories. I sound like the government when they treat it like a war. Yes,
Churchillian speech.
Yes, but no, there has been some fantastic advancements. There's been some fantastic progress, and reasons we should look at with pride. Yeah. I've despaired slightly with the booster program, because for the last 2 weeks we've been hearing about we're going to accelerate it, I had my booster about 5.5 months ago, but if I still log into the website, it's still saying, yeah, you can get it in January, because it's still applying the 6 months. If you want to go to a walk-in centre, you've got to prove you're a vulnerable person or have a doctor's note. So that's what the website's telling me. Obviously, Peter, your
the experience is
last
different.
night
You
was
can just show up and
contribute to it. And that, but a lesson learned, I think, from there was one of the reasons why we did well with the vaccination programme and we're ahead of other countries was because we swarmed it and we actually treated it almost like a private endeavour. We just got on with it. We'll tidy it all up later. A bit like we do sometimes at True Potential when we launch things. Instead of trying to get things to 90, 95, 99% perfection where you're almost polishing things, better to get something which is in a great state, which we know people want, and just release it. Because once you release it and once people start using it, that's when you know if there's actually a demand for it. So with the vaccine, we just released it, we got on with it. I felt with this booster programme, it's fell back in the realms of bureaucracy. It was all of a sudden, the NHS, and there is a rule for this and there's one for them. And you're like, no, they've got a hold of it. It's going to get strangled. So hopefully, I think by them looking to accelerate this booster, and it's got back to government and away from the...
Well, maybe that's been the upside of the last, if you like, not so much the panic, but the quick decision was to, as much as there's you don't want to see too much of that for in the media and all that sort of stuff. Maybe it was the jolt they needed to just get the booster thing, ramp it up and get people on. And as I say, I had mine last night and it was pretty slick. So
I think what's clear, Peter, is with the UK government ordering 114 million doses, it's going to be a repeat programme. This is something that we're going to get used to. We're going to have to get used to.
And you go once a year, get your yearly jab, and off you go again. And if that's where we are, that's.
I think as long as it stays a yearly job, I'm not a scientist, so I'm contradicting myself what I said before. But when you start hearing bits of like whispers, which are if everyone just gets a booster every 3 to 6 months, that can't be sustainable doing that. And surely that must be dangerous as well, because humans then start to build a reliance on boosters instead of what we're meant to do, which is build up some sort of natural immunity, and then you use vaccinations and what have you to give boosters at relevant periods.
But it's interesting, just on a local level. There's a plant down on Teesside which is Fujifilm, which is there to manufacture the vaccinations, and they've just announced a £400 million investment in Teesside yesterday to create another 350 highly skilled jobs. So when we're looking at what's happened, the effects of the pandemic, the health effects, yes, they were horrendous, particularly this time last year, but industry, commerce, trades adapted to that, and it's coming forward. So I think we're saying what's happened in the 2 years since COVID began. It's been an accelerator of change. Businesses have changed. We've changed. There's inward investment coming, which is all there to lead to a healthier world. I detect what people are getting really sick of. Just talking to friends and people in the office is because of COVID. The excuse that lame organisations give for poor customer service, it's because of COVID. No, it's not. It's because you're useless.
Is that linked to a personal experience with a certain nation's favourite airline?
It might have been linked to a personal experience where trying to change a seat on a flight, not the day, but the time of a flight, after being cut off twice.
Maybe it's just you, Mark. They might not like you. Maybe
I don't think it is, Peter.
No?
I'll stick up for Mark on this one.
We have to put the welfare of our staff first, and that is a message that's been given out on a telephone line.
It's been given by weak organisations and weak management. And I'm not blowing our own trumpets here, but we, the three of us, were sat down last night because we're talking about our sustainable reference material we're writing at the moment, and front, right and centre, right there in the middle of our thing is we put the client first. We start with the client, because ultimately, in any manner of life, be it an airline, be it an investment house like ourselves, be it Tesco's down the road, without the customer, without the client, the one who buys it or has the product, there is no demand, there is no company. Too often we see organisations starting with to protect the welfare of staff. Of course you have to protect the welfare of staff. We're not psychopaths here.
No.
Because if you don't have your staff looked after, you can't look after your clients. No. But if you don't have the clients in the first place, your staff don't have a job.
That's right.
And the welfare of the staff then really goes down if they've got nothing to do. And people will turn off from using organisations like that. I've moved from an insurer, you know, and I know advisors are doing it at the moment, because 19, 20 months on, you're still speaking to them. And because of COVID, our call waiting times are, you know, 30, 40 minutes. You're like, no way, no excuse now. You maybe had a month or two to get to grips with it.
Yeah.
Incidentally, we didn't. We got to grips with it one day. But I think we're a bit more agile than some old dinosaurs in our industry out there. But we're seeing that 20 months on. Because of COVID, our call waiting times are delayed. It's unacceptable. And a bit of a tip to any client who's listening to this and gets those messages, just swap those providers. Vote with your feet now, hurt them. It's the only way they'll learn.
I think, you know, going back even further to 2007 when we formed this business, it was recognised right at the core that every penny in this industry comes from our clients. And that's the most important thing to remember. And it's gone in COVID's been used as an excuse for poor customer service.
Yeah. But also an excuse for lack of innovation.
Yeah.
So those companies that have innovated have really felt the benefit of it. And we've seen some of the things that we talked about back in the first and second quarter of 2020. Well, will these trends sustain? Well, certainly they've sustained if we look at retail sales in the UK in terms of that proportion that's remained online. Everything's reopened, but the online proportion has continued to grow. It's now around 30% of retail sales. So habits haven't changed. Habits are formed.
It's out the box. You're right, Jeff. And again, to stay on the sustainability side of things, we were, you know, last month we completed 3,000 direct offers to clients who were moving to True Potential, and we're helping them get their portfolios onto the platform. 2.5 years ago, that was paper. It was a 20-page pack. Yeah. So, you know, 20 times 3,000 is what? 60,000? Yeah. So that was each month, 60,000 sheets of paper going to 3,000 different clients. Yeah. Look at the innovation now. It's 3,000 emails. It's 3,000 websites going on there. So it's an innovation that's helped clients actually, I think, have a nicer experience, because they're not having to sign things, post it. They just click it online, they read all the information, it's there. The transfer happens quicker, so their money gets invested faster. We then win from that, from the client having a better experience. How do we win? Because when it's not costing us 60,000 sheets of paper. From an environmental side of things, it's not the carbon footprint, which you've been looking at, Jeff, of 60,000 sheets of paper, getting printed, getting stuffed into an envelope, going on the Royal Mail van, getting dotted around the country as well. So good innovation will help that entire value chain. Yeah. But starting with the client, as Jeff says, and we'll never go back to sending paper packs out now, just like Jeff's saying with online shoppers. Once the habit's formed, once it works, once it proves the concept, it's much easier.
I was going to ask, it's a good topic, because I was going to say, what are the other, looking back over the last couple of years, how has True Potential changed as a business between, say, December 2019?
I think that's one, in terms of an innovation where technology's really lifted off. I think another exciting bit of technology, or use of technologies from our clients, again, we're on probably 4.5 million client logins this year alone, which is up hugely from last year. The flip there, which is always exciting to me, is about 2.9 million of those 4.4 logins have been on the mobile device as well, versus say the web. So we've seen that shift there. So from sticking with our clients side of things, our clients' habits have changed with the technology and how they're using it, how they're interacting with us. If we look at what head office is like now, we're fully in the hybrid working side of things. I think we were doing hybrid working before hybrid working became a trendy term now. But again, it wasn't about doing hybrid working just to kind of suit us, suit either the business or suit the employees. It was to start with the clients first, which is how can we maintain an excellent level of service? How can we make sure we're answering the phones in less than a minute? That then sets a prototype from there, which we then apply to our staff, which is how can they be happy? How can they deliver quality work? How can they feel fulfilled in their role? Because all of those measures there mean they'll deliver a better output to our clients. And again, True Potential wins from that. So at any one time now, we've got 109, 110 rotated staff in. We've got about 50 permanent members of staff in the office. They'll work 2 days in, 3 days out, and across 3 separate teams. And across the entire month, everybody will see everybody. Yeah. We also rotate them and move across. That's really important as well. So that way we don't just get the investment management firm come in and they only ever see Johnny and George or whatever. They actually go and see their counterparts who work for TPAS. And then the week after they see their counterparts who work in development. That's important, that kind of cross-pollination, because it also means we understand what's going on with the business. Again, that means we understand what's happening with our clients.
Yeah. And who else which other businesses have impressed you in the last 2 years? Anyone you deal with yourself that you thought they've handled it kind of well, or have you seen the emergence of any other types of new businesses? I mean, obviously everyone talks about Amazon having done very, very well. Clearly people are ordering more, and the Amazon drivers, there's a lot more of them around, I suppose. But anyone else sort of impressed you, or any other services you think they've done well?
It's been an interesting one, Peter, because not so much people that have impressed, but if you look again at consumer trends, going back to the early days of the pandemic, the Netflix subscriber numbers increased dramatically. And we were giving out, the staff webinars, people are coming on and say, well, have you watched this box set? Have you watched that? So there was a lot of self-help going on there. Yeah. It's hard, isn't it? We're talking about like negative press, and the things that come to mind are not so much good customer service; it's bad customer service that we've been talking about so far. Yeah. I just tend to judge it on how we performed here. We reacted very quickly. There wasn't any interruption whatsoever to service, and as an investment management team, we actually had to do more during those early days to reassure people that we had a good idea and a good view of what was happening within the portfolios. And to try and relieve the burden, everybody was going through a lot of anxiety about the pandemic and the health reasons. What we didn't want to add to that was worry about life savings, pensions, etc. So we stepped forward. So who impressed us? True Potential.
Well said.
Biased answer.
Well, an accurate answer.
But I suppose at the heart of that is your focus and the strategy that you have as a business. Yeah. You don't craft strategy in that environment. You have to react to it. But if you're planning and you're thinking about how you want to be agile, how you want to be adaptive, with technology as your core, you can be that.
I'm just thinking ahead to the next, if you look ahead 2 years, I mean, nobody, as I say, in December or November 2019 would have predicted this, so it's pointless making predictions. But we are where we are now, and I just wonder, in terms of the broader consumer behaviour, what we might see, if companies are really are going to, grab the opportunity, as you've said, as True Potential has. What might we see changes? Just your views. I mean, we were in London a few weeks ago, Dan, and we were sort of nearly got taken out a few times by a few people on motorbikes who were doing the Just Eat run and the Deliveroo run, and I mean they're not new businesses necessarily in terms of the pandemic, but they've probably come into their own a bit.
I think they've come on their own, and they've then set that habit, like Jeff was saying. Yeah. So personal experience. I take the children to gymnastics on a Sunday morning, and as a treat for them, but I think it's more so I can get a coffee. I'll take them to McDonald's afterwards. Yeah. And it used to be you could sit anywhere in the restaurant. Half of the restaurant, that sounds very posh, doesn't it? It's a McDonald's, half of the building is now taken up with Uber, Deliveroo, Just Eat drivers. Yeah. So all sitting around, waiting with the big bags for the people to shout them. Yeah. And that's like almost half the real estate, which is now not available for customers to sit in. And I'm not really seeing that declining. So you kind of think, is that kind of maybe tradition here to stay? But I think, look, the companies who are going to win and flourish, technology, of course. So no one's surprised that Amazon did very well. They're just geared up for a pandemic, to be honest with you. Netflix, Disney Plus, all of those organisations giving streaming media again, especially when people were locked in their house, they had a lot of time on their hands, flourish. But if you look at more traditional organisations, those who should win will be people, I think, who offer a really good service to clients, which differentiates, because it can be easy. Like, good luck if you get a bad order with Amazon. Sometimes you get lost in that black hole from there. But as I've mentioned, or as Mark's mentioned too, there's a lot of organisations still cowering behind COVID to deliver bad service. And I think there will be a revolution with people voting with their feet, where people will just say, I've had enough, I'm paying too much for this, or I can get that product just as cheap with Amazon or with whoever.com versus going to the local shop. And I think that'll be the big change. It's companies are going to have to work really hard to deliver a more personal service to the clients, or you will get taken over by online.
What it's also done is it's brought it more visible.
Yeah.
So for those companies that don't adapt, don't change, it becomes very evident that poor customer service isn't something that people are going to accept, because you go online now, you compare, you contrast, and it's like, right.
Yeah.
But it's not just a certain age group. I think it's across all
the board,
demographics are doing that. So those that maybe didn't use online before, use comparison sites, they're now using them. It's not just the younger cohort. It's our parents, etc., that are looking at that and thinking, "Oh, right, I'll use that. I'll do that differently."
It's a really great point, actually, Jeff, because you say it's so easy now just to compare.
Yeah.
You know, you can compare 3 or 4 similar products and the price in minutes online versus hike and to each shop.
Yep.
I was in London 2 weeks ago, 3 weeks ago now, and I said to my wife, "We'll get you a new handbag and whatever," because we just had some good news. So we thought, we'll go in, and we went to the Chanel shop, which was, there's a happy outcome here because we didn't buy a Chanel handbag. So and the happy outcome being the cost of the things. But, this is their flagship shop. That's a hard thing to say on a Friday. Flagship shop on New Bond Street. And there was a queue outside, and they were only letting a certain amount of people in at any one time because of COVID.
Yeah.
And then you go in the shop, and it was a dreadful experience. And you're talking about handbags, by the way, which are like £4,000 up. The starting there. You're walking around the shop, looking at things. There's nobody really serving you, and what have you. So, Gemma left disappointed, as I say. I left happy from there. The day after, we went to what you class as still a luxury brand, but an inferior one compared to Chanel, which was Mulberry. Went in there, and they couldn't have been better in terms of looking after us. The lady was straight over, asked my wife, what do you want? And she was started off with just a purse. But then the bottle of champagne came out, and silly me had a couple of glasses of champagne.
Yeah.
And then next thing, I grabbed a bag and said, "Well, look, you're looking for a bag. This
so
matches the purse." So it worked. The trick worked. But we were in that shop for nearly an hour, and it was a nice experience. Now, of course, I could have bought that bag online and the purse, but because we had the experience to look at it, open it up, and take our time and be looked after by somebody, the lady in the shop got the sale. She got the commission from there, and maybe that's what it is. Maybe it's service, but maybe it's experience as well, where if people are going to physically go places, they need to get something tangible out of it, not just stand in that queue for the Chanel. If you like that one, we'll find someone to get you.
That came out when we were on seminar tour as well. Was it October?
It was October, yes. Yeah.
We stayed in a hotel in London, which we won't name because the lawyers will probably come straight at us. But the service there was awful, absolutely awful. But then we moved to Bristol and Southampton, and the two hotels there, the staff couldn't have been any different to the London-based hotel. Now that's not a slight against London at all, but it seemed to me that in Bristol and in particular Southampton, they were happy to be at work. They were happy to have you as a guest in the hotel, and the staff went out of their way to talk to you, whereas the London people they kept us queuing for 25 minutes to check in.
Well, what it means, Mark, is that next year we've booked the May tours and we've booked the October tours already, and we're going with the same hotel in Bristol and Southampton, and we're not going with that London hotel. No. So they've missed 2 large bookings next year. But I think that's a good point about, and maybe this has been driven by the media, maybe this is driven by people feeling sorry for themselves or feeling like they're worth more, but all of a sudden, certain places, it's like they're doing you a favour.
Yeah.
I think I'm going to serve you, I suppose I'll get around to it, which was what that hotel in London was a wee bit like, to the point where I saw the queue, and I went over the road to the pub. I thought I've just had a different type of check-in experience, but this was on Sloane Street, one of the poshest parts of London as well. So it wasn't like the.
Did everyone follow you to the pub?
A couple of other naughty colleagues did, yes. Not Mark though. Mark's.
I stayed and got more bad-tempered.
Yes. Yeah.
That sounds like a flagship move. Everyone followed you up into the pub. Good. All right. Well, look, that's interesting. I think the big takeaway then, I think we've kind of touched on it right there then, looking back at the last 2 years, which was the topic of the podcast, is don't settle for second best, don't settle for poor customer service, don't settle for the queue in the hotel if they're not prepared to serve you. No. Don't settle for the provider who takes 45 minutes to cut you off, let alone answer the phone.
Mm-hmm.
You know, don't settle for it. So maybe that's the experience that we've all had and that people will have had as well, and maybe that's a good thing to come out of. Maybe it's cleaned up. Maybe it's got rid of some of those organisations that weren't adapted.
Yeah, people have had 2 years where we've been locked down, locked out. You know, and you know, people have more time to think what they want. People have more time to organise their lives and set things up. And I think it's important that people don't just get back in the groove and settle for second best again, because that's the way it's always been. And I think it's a slight pitch for us here, but it's what we're trying to do with the client. If we can get it right for the client, we'll enjoy business benefits from that. So that's always our hard push, and hopefully, ladies and gentlemen who are listening, they feel that as clients as well.
Yeah, well said. Right, I think we'll probably begin to wrap it up then. So I know what you're doing this weekend. You're going to gymnastics and stopping off at the McDonald's restaurant on the way back, aren't you?
It's Krispy Kreme this week, so there's also a rota system. So 1 week it's McDonald's, 1 week it's Krispy Kreme.
This been thought
this
through.
Week is Krispy Kreme on the children's rota. I think I'm also going to get a winter pine tree.
Right, good. Yes, nicely done. And I'll take the opportunity while I mentioned Just Eat and you've mentioned McDonald's. If anyone is doing that this weekend, there's a very good reward system that they can order their Just Eat on.
There is.
Do you want to tell us about that?
Yes, if you log into your TP Investor app, click rewards,
Yeah.
click Just Eat, or I think it's. I live in the middle of nowhere, so I get like the local rubbish pizza shop, but it delivers via Just Eat, so I only know about Just Eat. But yeah, then you get 10% cash back. I think it is, and those 10s and 20 pences, but also for a lot of your festive shopping. Right. So I've got £100 pending right now on TP Investor because of festive present mania.
That handbag, that purse, did that?
Alas, no. That was a physical purchase.
Yeah. Oh well.
It was worth it for the champagne. Yeah. I'm a cheap date.
That's right. That's it. So I've heard. Jeff, are you splashing the cash this weekend, or what's happening?
We've got my youngest son's birthday this weekend, so looking forward to that. Some celebrations. Might also be picking up one of those festive trees as well.
Yes. Are your decorations up, Mark?
No, not yet, Peter.
Oh, right. Full of cheer, I can see.
Yeah. That's right. No, we'll see what happens at the weekend, Peter, but I've got my COVID booster to look forward to.
Do you?
So I've got Newcastle United against Burnley and the COVID booster.
Now, well, it would be more fun.
The booster will give you a little bit of sore arm, and the match will give you definitely a sore head.
That's right.
The next day, I'm sure. Who's Newcastle playing this weekend?
Burnley.
Right. Oh, another 6-pointer.
Yeah.
Were you there in the week?
I was certainly there in the week.
Oh, right.
Yep. Yeah. And I'm not saying anything else, Peter. I know you're trying to get me to.
No, let's not.
Sending off after 9 minutes. Yes. We could have another 90 minutes of podcast on that one.
Are you doing anything, Peter? Nobody ever asks the host. So I'm going to involve you.
I don't know what I'm doing. Oh, I think I'm going to see. I might be going to see a man in a big red suit.
Is that someone from Sunderland?
That's right. Yes, I think yes, well, he might be. I think that's the plan. We'll go and maybe see what he's got. Maybe go and sit on his knee, because I noticed you did that last week.
I did. I met Santa already this year.
Yeah,
I've told him. Well, I've told him I've been a good boy. I'm not sure he agreed.
I'm not sure he agreed with you.
He didn't give me any sweets. He did tell me that.
Yeah. Oh well, I'll let you know how I get on, because I'm doing the same thing this weekend. Good. Well, thanks very much. Good discussion. I've enjoyed that. Before we go, there's a little bit of breaking news. It's always good to end a podcast on a happy note, and it's also good to end a London trip on a very happy note. And that, in fact, was the case for somebody who's just sat away to my left-hand side this week. So, Katie, would you mind just coming and people won't have seen you before? Would you mind just coming over and just plonking yourself next to Mark for a moment, Katie, if you wouldn't mind? This is going to be well worth it for us.
Hello, Katie.
Hi, Katie.
How are you?
Okay.
Are you all right?
Yeah.
Sure?
Yeah.
I said at the start, it's podcast 97, and you've been involved in, well, all 97 really. So just before we have a little chat, tell us, for our audience, because you sit here every week and you're very much part of it, but people wouldn't know you. So tell us a bit about what you do.
So I work in the marketing team. We've got a nice little small team, and myself, Graham, and now Sarah, we do a lot of the videos.
Yeah.
So all the podcasts, morning markets, so me and Jeff are best friends, and
Yeah.
and we work with any materials, brochures, emails, all the fun things.
And how many takes did Jeff need this morning for morning markets?
Just the one.
Oh, yeah, good.
You make some mean
Perfect
videos
trigger.
about Jeff sometimes, don't you?
Yeah, for the staff
Yeah,
webinars.
yeah.
I haven't managed to negotiate that out yet.
Yeah.
So you've been in London earlier this week, weren't you?
I went on Sunday and was back on Tuesday.
Yeah. Anything happen while you were there?
Yes.
Do you want to tell us?
I got engaged.
Oh, well done! Congratulations.
Thank you.
Can we have a? You'll know. I don't know whether that's camera 1, 2, or 3, but you will. Can you show our wonderful audience there? Look at that.
There we go.
Isn't that amazing?
Congratulations.
Thank you.
And tell us about it. Did he get down on one knee?
So we were staying in the Shard for our 4-year anniversary,
Oh,
only on the
nice.
second night, and we was in the restaurant, and he got out a little bottle with a scroll in. He wrote me a little poem, and then he got down on one knee, and
Did other people see what was going on?
he requested like a quiet corner, so
right.
thank God no. It was just nice and private, but and then we celebrated just looking out in the views of London with some champs.
Brilliant.
Any tears?
Yes. I didn't think I ever would be teary.
Yeah. Well, there'll be a few tears on the cake now as well, because that's the next thing.
Oh my God.
Oh, very good. Very good.
Yes.
These two are a bit slow on
Finally
that
got
one,
the
Jeff.
joke. Yeah.
We've got something for you, Katie. Just let me, just somewhere behind the curtain, I believe, is a little something from us to say, well, first of all, to say thank you for all your help on the podcast, but in particularly, enjoy this tonight as a little, well, Dan, you do the honours, because I feel like it should come from you.
If I do it, then I'll have to buy a Mulberry handbag.
Well, I'm sure Katie won't say no.
No, but congratulations.
I'll have a Chanel.
A Chanel. There's bad cues there. Congratulations,
thank you.
Katie, from all of us.
Thank
Wonderful
you.
news.
Thank you.
Yeah.
Thanks.
There you go. Congratulations.
Shall I move back?
No, I
No,
think
you
like
just
it.
stay right
Yes.
there. Well, hoping you might just even open that for a shorty, but please don't let them persuade you to do that. So there you go. You see more proof that we on the True Potential podcast, we just make people happy. So subscribe and join us next week for more fun.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money. Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.